This is Rod Kusin Spoolman for Risk on February the 12th, 2019. All times on the chart are Central Standard Time. We are long this morning, heading up to the 2734 level and beyond. So we're just looking for a good opportunity to get long in here. We're obviously going to target that major. This is a very major market profile level because this takes us back to approximately 2 years ago, I believe it is. Yes, well, really even 3 years ago, to the 8th of February 2016. Big pivot point there. So we want to be long into this, and we're just going to be looking for a good opportunity to get long, and we'll come back. Okay, we are getting in very close to the 3450 level. We're going to take some profits up there. We got in over here. We jumped in. I'm sorry. I said that. I can't wait. That's dumb. But anyway, we got in over here. And signals here and here. This one at least wasn't too bad. But these short signals here, we're ignoring, just completely ignoring those. Those are just strategy signals that are set up to detect potential areas for pivots. But when you've got such a strong number at 3450, it doesn't make any sense to bail on this, because it's very likely going to continue to move up even beyond that. Let's just take a look at the premium. Nothing really compelling on the premium at the moment that would suggest this is going to drop. We're getting a little bit of divergence, but not too much. Well, let me take that back. Let me show you this. Let's get the premium screen here. As we were rallying up here, we got some new highs on the premium. That's to be expected. But overall, the premium is dropping. And that last new high was a lower high. So that's a little bit of a concern. That's a little bit of a concern. We could see a more pronounced drop once we get up there. But really, yeah, we've got to get to 3450 before we're going to get too concerned about this shorting. But we'll let the strategy tell us. Well, we do have conditions for a potential short developing here. And the market seems a bit cautious. Okay, premium is long. Here we go. Nice spike up on the premium. Not going to take that. We got a limit order to just take profits at 34.50. There we are. Premium is still up. And we're getting new highs. So this isn't where this thing is going to short yet. This is going to continue going up. Ignore those short signals. This is continuing up. We're still riding with a little money on the table. So here's where the premium was as we rode up to the top here. Now it's not quite as high as it was here. That's admitted. Oh, and we're getting a little dip on the premium now. That's often an indication of a possible pending short. Yep, I think it's gonna short up here. Let me tell you why. That was the high. Premium is coming down. As it cycles back up above this slower moving average, chances are that the highs of the premium will not be anywhere near as high as they were here. And if that is the case, down we go. We've got to get back up, however, to the high of the day, 35.50, or better, lower on the premium. And that could be, at that point, a good place to short. Yep, yep, it's developing that way. That was 35.25. We didn't take up all the way to 35.50. But the premium, as you can tell, is lower. No signal up there. We weren't really, just barely overbought there. All right, we'll wait, see if this goes back up, but we're out of the long. Okay, premium is heading back up here. Made it back to 35.50. We've got some divergence here. Yeah, premium is short, so no signal, but you can see the divergence there. Just look at the highs, look at the moving average. There's divergence up there. And we've already dropped a point. We don't have every conceivable situation programmed, but that looked pretty short right in here. That really looked pretty short. And we'll see if we get one more bounce off of this low as we come back down. Okay, we're getting a long trade in there. That's maybe the last of them, if at all. And we have to wait to see both of these moving averages turn. Overall conditions for trading this are not for trading long right now are not very good. I don't like that long signal. Now we're turning. Okay. All right. Got a lot of confluence there. We have multiple strategies that are programmed, but we're in a situation right now where taking a long trade is really kind of questionable. It may work. But I'm not too proud of that. Yeah, this is continuing to move down. Yeah, I'm not proud of that at all. We're higher, obviously, than we were here. Okay. No, that doesn't look good. That does not look good. Okay, we're set up to only short this. I'm not confident of any long trades right now. Not really. I'm seeing too much evidence that the premium is divergent. Let's look at the big picture. Yeah, this is getting ready to turn. At least it surely looks that way. At the moment. And we see that being reflected in the move down here. I would like to see us get back up here to test that 35.50 level before we actually jump in, but the strategy is getting us into this short even now. Our slower moving average on the premium, though, is still climbing. No, now it's turning. Yeah. Okay. Alrighty. That wasn't bad. That wasn't a bad signal. Now, if this continues to short, let's look at the TPO. Oh, yeah. Yeah. While obviously it doesn't always occur, typically the low value area gets tested. And we've got a long way to go to get down there. All right, so this short looks like it's liable to materialize nicely. We'll come back in a while and see where we're at. Now we shorted it up here. Got a long condition here. Not a long trade, a potential retracement here. That's what that signal means. And so I took a little money off the table. I'm only at three short. That's not much. Actually, I'm only one short now because I'm seeing. Let me show you what I'm seeing. Oh, but that just changed a little bit. That's good. So we're not getting any new lows on the premium here. We're higher than we were here. And while we're coming down, this really needs to turn and come down quite a bit more. And it's just not doing that. And we're getting into an area of relatively low volume from the overnight market as this market moved up. And that could cause us to turn and go right back up. Because it isn't going to like that. And we're there right now. Let me show you where we're at. This area of low volume. It sometimes doesn't like to play around in there. It'll go back up. And so with the premium not really tanking in here, I'm kind of suspecting that it might just do that. And rather than to risk it, now we do have the VWAP over here, and it does like the VWAP. It might go ahead and those of the premium are going higher though. Now you can play it safe and just dump the trade and be happy you made something off of it, or hold out for a more pronounced move down to the VWAP, because it'll do that. We just don't know how far up it'll go before it'll turn. We got the POC over here. We'll hold it. Well, and as you can see, that's exactly what this did, and it came right back up and pushed through into a new high for the day. right? TPO down here is real important. And as the premium, right as it was getting down there, this is what happened to the premium. It turned and up we went into a new high for the morning. That's why watching the premium is important. You got to learn how to read this. It's a fantastic indicator, and you got it works. So once again, as the Spoos kind of began to retrace down here, right at this point, okay, corresponds here on the premium with this much slower moving average, right? Premium started to go long right at that low volume node on the profile, which was pretty indicative that this was going to turn, and in fact it did, as you can see. Now we've started to get some short signals here on top, and that's beginning to make a little bit of sense, because as you look at this, I have to, no, you can see this clearly enough. Okay, now you can see it clearly enough. All right, here's the moving average. It's a very slow moving average. You look at this high, okay, that was way back on the left, way back here. Now you come to this high, you're at a lower high, all right? So yeah, that could generate a short. We come up here, that's a higher high than this. But now this in here is a lower high, just slightly. Let's look at that for sure. That's at negative 30. And this was negative 29. So just slightly lower. So that could produce. Now, I'm not sure why we got this long signal in here. Let's find out. Okay, that was strategy 14 that picked off a long trade. Now we've got a battery of different long conditions, particularly the slope of the CCX indicator. That's this. That was really driving this long trade. That slope is up, but it is also greater than 100, which can become ambiguous in that at the moment that particular setting is both long and short, for the reason that it's sloping up, but it's above 100. So that we want to manipulate the settings live so that we don't get ambiguity. Because the same strategy went short right here, and now it went long. And that's the reason, because those conditions are both short and long due to the value as well as the slope. And here that same strategy is now kicking off a short trade. So what's important to do is to eliminate that ambiguity, read the premium, and let the premium dictate whether or not you're long or short. So when we go back to the premium here, look at this particular setting here, the wider band. That's short. It's not long here. It's long in here, okay? It's long in here. And so that's what we really want to use to determine whether or not we're going to reset the settings that exist within the strategy so that the ambiguity created by certain indicators is eliminated. That's why we have an open source code. So it was good to be short up in here as you saw this premium dropping. Now, it dropped again right there, a major drop. There's a premium taking place right in here. Now, if you're one of our students, we want you to make sure you understand what's happening right now and how not to interpret this. All right, this is the premium is sloping up here. All right, premium is sloping up. But from the standpoint of the high here, this is a new low. Okay, relative to the high, this is a new low. So even though the premium may be sloping up here, and even though this is coming up a little bit, that is not a good place to go long, because technically you're not divergent in here. You want to let this slope up, turn again, and come down. And on that second cycle, as it's coming down, if the lows of the premium are now higher, now you've got your divergence. But this right here, this is a new low. Yes, you've got a bit of divergence, that's true. But the bigger picture shows you're not. So don't misinterpret that. Always look for the divergence, just as it was up here. Okay? Once again, let's just look at those numbers. The slow moving average, negative 29, right? Slow moving average here, negative 30, okay? Another way to look at that, just look at the highs of the premium here and the highs over here. So when you look at these highs, the actual highs on the raw data, the high was here, lower high, lower high. Now I have these purposefully grayed out so that it doesn't look too busy, in as much as it is relatively busy anyway. But you can see that the real divergence is here and here, and more particularly right there. And look at where that corresponds on the ES. Okay, it's right at the high. So as we tested the high over here briefly, we're even at a lower high again. And then right in here, a lower high again. So at any point in time, getting a signal in here and taking that trade made good sense. But now look at what's happening right now. It's very telltale as to what's about to happen. All right, the premium started going long. All of the moving averages were sloping up. And what was happening here? Barely moving. When you see that, it's a pretty good indication that when this begins to turn, this is going to really take a more profound move down. Now, it can happen that this will continue to slope up and this will finally catch up. You got to watch it. But at the same time, often when the premium continues to move in one particular direction, trending up, and the Spoos aren't responding, it's because the cash index is moving and the futures are not. And the next thing you know, you get a turn and this drops precipitously, which it's just beginning to do. You see how the premium is turning? The fastest of the moving averages is just now turning, and you're beginning to see that drop in here. And there's a signal. We'll come back. Well, now, however, as you can see, the ES did continue to move up as the premium was moving up. But all the same, we're much lower than we were before. So here we're gonna see a short trade develop up in here, and that's going to be valid for us because we're divergent again on the premium. So unless this was to turn and move up again much more strongly, this will turn at a lower high and the Spoos will come down with it. So let's just see what happens here. Because we're getting up to the high of the morning, and look at the time. It's just past 10:30, just about in an overbought condition. Premium is divergent. You know it's divergent, okay? Just look at the values. You know this is divergent. So if we get a signal up here, that's well worth taking. I would hope that we would come all the way up to the high of the morning. But of course, if it's a lower high, that's even better. That's even more evident. Okay, there it is. It's turning. Let's get into this short. Now we didn't get a signal. A little bit surprised. Maybe it'll come if we move back up one more time. But just reading the premium is enough to tell you that was a good time to get into the short. We don't have every single condition programmed, but we have enough of them. So now remember what we said about the low in here, right? That's not the low. If this climbs up and it becomes divergent, which it did right at the top, then when this comes down, it's going to drop below that level. All right? And we were in there at about 27.40. So you know it's going to go lower. But now the question is, at that low, will we be higher on the premium? Okay, and right as we dropped into this low right there, you saw here that we were higher. Now I think we can afford to give this a little bit more time, because this is going to turn again and we should come down. Because again, I'm looking at the time here. We're past 10:30, and that's a good place where the market says, well, whatever we were going to do this morning, we're done, and we're going to go the other way. And that's about what it looks like is happening right here. Well, that little divergence is taking us back up again. All right. Let's see if we get a signal up here. And this little move here, as you can see, is so clearly shown on the premium. We went lower as we said we would. But when we did, all right, when we did, this began to slope up again. Now, let's see if this, okay, we have the signal. We're still moving up a little higher, though. I think we're a little premature on this signal. Because right in here, look at the value. We were at 42. We're now at 39. We're at 40. We're higher. We need to be lower, and we're not. So this is coming right back up. You don't want to short it yet. You got a signal, yeah, but that's why we tell you use some discretion. And we've got a higher high on the premium right now. This is not the place to go short. Now it's just beginning to turn. Wait for it. Okay. See, pushes right up. That's where you don't want to get caught. Don't short it yet. In fact, don't short it at all. Forget those signals. Watch the premium. We're not short here. This is long. This is very long. Higher, higher, higher. No, 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 no. Now you can get a pullback here. You can certainly get a pullback. But this tells you that's really not the short, because this has now moved higher. The market is long. Now, incidentally, we did a little ABC extension here, Fibonacci extension, from the low at 26.8075 to this high to this low, projecting us to 43.50. And of course, we've just breached that. And so that would have been a nice target for that long, at least initially. But with the premium continuing to move higher, there's really no reason to be now shorting this at all. None whatsoever. So we have readjusted our strategies to only take long trades because there's such a good probability that this is going to continue to move higher. Whatever move we thought it might produce after 10:30 has now failed, and now the pattern for the day. Let's take a look at that. Let's also check our IB because we're way up here at the second standard deviation. We've got a red day pattern up here. We've definitely got a red day pattern up. And so the highs ought to be in the last half hour. Now we could get a good retracement as this hits that IB projection, the second standard deviation line, at roughly 45. That could produce, but so often we see it blow right through there, which if the premium is continuing to move higher, we can expect that will take place. So right now the next projected possible short would be right at 45, which is about where we're going to hit momentarily. So very important that we watch the premium here. All right, new high there. At 23. Lower high right in here. So we'll see if this begins to turn, because that could produce. That could produce. And surprisingly enough, our primary indicator is our primary trend indicator is just beginning to turn here. So it might this might actually be not such a bad idea. Shorting it right at around 45, 44.75, 45. Watch this turn. There was the tick up. This should begin to turn at a lower high, and that could produce a nice short. Yep, there it goes. Yep. Not bad. Not bad. Now, while this short is producing, I thought I would at least mention to you what this horizontal line represents. The horizontal line represents fair value. All right, we get it from Hank in his morning call right here. And we often will place it on our premium chart to see where the premium is relative to fair value. Now, it is not entirely consistent, but as you saw, that for the bulk of today, all right, other than, the very open, premium was sloped up, and it has been above fair value through the course of the morning. And that's a fairly good indication, that the market ought to be rallying. Because conversely, if on the average we were below fair value, the market should be shorting. Now you want to follow the slope and you want to follow divergence, but this is a pretty good indication. All right. So I like to do that. I like to put it on there. And so this would have given you a good reason to expect a rally today, but with, potential pullback based on where we find divergence. Okay. Now, another thing some people wonder about, what about this paragraph? All right, I'm going to give you a secret. Hank called today even money on a long or short. If you get his report, which I don't, but he called even money. Now, how do we know that? Well, because what you do is you look at where his buy level is relative to fair value. To hit a buy execution level, the premium would have to move how much from fair value? It would have had to move 1.4 to reach a buy execution level. Well, how far would it have to go to reach a sell execution level? Well, what's the difference between 220 and 80? It's also 1.4. So if the distance, if you will, that the premium has to move to hit a buy level is the same as it is to hit a sell level, he's going to call horrible odds for either direction. And his other statistical probabilities based on, yes, we're in an expiration week, in a red pattern week, or pardon me, in a, what are we? Next, he's seeing next week is red. So what is this week? Okay, if you don't know, call me. I'll let you know. But anyway, point of the matter is he comes up with all sorts of statistical probabilities of this and that happening. And then he uses these numbers in particular to give you the overall raw expectation, which he called for horrible odds. Well, it wouldn't have taken us very long to tell you what those odds were that the market was going to rally, because on the average, the premium has been well above fair value all morning. It's really that simple. You don't have to pay $1,500 or $1,600 or whatever it is he charges to figure that out. We know how to do it. Okay, so we've got a nice little short that was produced here. And it wouldn't be surprising if this just drags out for another hour or so as it tries to move down to the ascending upper value area. And who knows when it might in fact intersect. But this looks like it's going to be kind of slow going. But that's what it probably will do. It'll retrace down to the upper value area, bounce off of that, and then head back up. And depending upon when it finally gets there, it could be, if it takes a long time for that to happen, well then, in any case, in the latter part of the afternoon, we definitely want to be long because this is a nice red day pattern up. Okay, we're going to temporarily suspend the video. We'll come back in a while and a recap. All right, we're getting very close to the upper value area. It took place a lot more quickly than I expected. And we got a long signal in here. So now what we want to do is we want to see the premium begin to slope up, because quite likely, unless we get another big move down, we're going to be divergent here. So I'm going to take profits on this short. Right at 38.75 if we can get it. 38.75. We're getting long signals. Watch the premium. It should begin to turn. Fastest has turned. Second fastest has turned. So we want to be long in here. Yes, indeed. Now okay, premium is sloping up really fast. Everything is long. Whoa! Nice! Nice! That didn't take long. Woo! Oh yes. Oh yes. Very nice. Very nice. Good. That was cool. That was cool. Okay. That's how we do it. Alrighty, that's our video for the morning. Again, pretty good indication this is a red day up. So with that thought in mind, we look for a high of the day in the last half hour. We have an automated open source strategy. You can program this according to your own particular needs. And we have pre-programmed strategies already set up, but the most important thing you can do is learn how to read the premium. That's our long suit. That's what we try to help people to see. And we've got this little indicator. It's the simplest thing we've ever designed. It couldn't be any more simple, and it works. All right? You got to learn how to use it. It's very, very easy to use. So, come take a demo, ask us whatever questions you'd like. We'll show you how to adjust the strategy if you so choose to do so. But it's a fully automated strategy with stops, profit targets, etc. And it works quite well, very well, because we try to eliminate all of the minor decisions that go into pulling the trade and help you to focus on the major issues, the major trend, the slope of the premium. You got to have your eyes glued to that. And then when you ultimately take the trade, okay, you should have a very, very little downside risk if you're paying attention to the things that are most important. With that thought in mind, I'm Rod Kusin, Spooman for Risk.